Hi, this is Jens Torst of the Hartman Group. Thank you for joining me to review a Hartman program on health insurance exchanges. Our objective today is to provide you with some general information around exchanges, public and private. The agenda we'll follow will address the following questions. What is an exchange? Some background, what differentiates a public exchange from private, players in the market today, what an exchange looks like, as well as some identified references and resources. Finally, as always, we'll provide our primary takeaways. Please keep in mind that our intent is to provide some baseline education, and any need for tax or legal advice should be received from the appropriate counsel. So, there is some considerable confusion around what an exchange is. Like these sites we are very familiar with, in this context, an exchange is simply a place we buy stuff on the internet. So, in other words, a health insurance exchange is a place where we can buy health insurance on the web. With that said, there are some unique aspects to operating a public version of these exchanges. One function is very engineer-oriented, dealing with the maintenance of the site as well as the considerable IT architecture. Another function is around risk. These exchanges deal with risk adjustments and reinsurance programs, and they also deal with administration of rules, including certifying the plans eligible to be on the exchange, as well as eligibility of members. And then there's a pure administrative aspect to these organizations, including human resources, finance, accounting, etc. It's not to say that health reform through exchanges is entirely attributable to the ACA. Both Massachusetts and Utah implemented variations around this theme pre-ACA. So, what causes a public exchange to be special? The first thing that comes to mind is the potential availability of subsidies for certain eligible people, particularly those above Medicaid eligibility and under 400% of the FPL. Now, this is a topic unto itself, but these are exclusively available through public exchanges. These are run for the state, and states have some choices as to how they're administered. Three options include A, running it by themselves, B, deferring fully to the federal office of the exchange through CMS, or a hybrid/partnership. As one friend explained to me, this is the way Pennsylvania defined the plumbing of the exchange. And as you can see, there are quite a few moving pieces with the implementation of an exchange. So, initially, Pennsylvania indicated that it would prefer to run its own exchange, and then at the end of last year, Governor Corbett changed the direction. So now, per this map from the Kaiser Foundation, Pennsylvania has joined a large number of additional states defaulting to the federal government to run the program. So, how are the private versions of these platforms different? First, there is no direct subsidy available under this form. Furthermore, these platforms are not strictly a concept for the future. These are available today. But there are also numerous flavors to these platforms, including agency-based versus carrier-based, competitive versus exclusive, etc. If you'd like to delve into the details of this slide more, please contact one of our consultants. And note that the providers in this space do have different markets they focus on, as well as different platform features. This is a summary of 5 insurers that we work with that are either in or getting into the private exchange defined contribution business. So obviously states are faced with decisions about how they want to go about their exchange. Whether you're an employer, an insurer, or a consultant, though, in the market today, you're also faced with a similar set of decisions. If right for you to be in this business, do you build your own? Do you buy one, or do you partner with an existing platform? The good news is there is already a lot of competition in this space and solutions available in partnership with good consultants as well as through health insurers. This is just a small listing of the vendors competing in the space today. So let's go through an example of a private exchange that is exclusive. Here's our member Sven. He's getting options through Clear Choices, a private exchange. It's exclusive, so there's only one insurer offering products through it. And as you can see, he's got a few choices here, a couple of PPOs, a couple of RX options, as well as an HSA. Now, Sven's not particularly astute about insurance. How's he going to make his decision? Well, Clear Choices has a decision support tool, the Bookworm, that helps evaluate his risks, family situation, and preferences, and it supports his decision making. I hope it works well for him. Let's go through another example of an exchange, but let's make it competitive now. Here's our member Sven again. He's getting options through Real Clear Choices. It's a private exchange. Now, the options he had before are still here, but he has some additional choices through Insurer B. And he isn't particularly astute about insurance still, so how's he going to make his decisions? Well, Real Clear Choices also has a decision support tool, the Avatar, that helps evaluate these risks, his family situation, etc., and supports his decision making. I hope it works well for him, and man, I hope the employer evaluated how effective this Avatar is, because Sven might need some help. So finally, to kind of get to the point, you can understand if you add additional choices that it becomes increasingly complicated. This one adds ancillary decisions around dental, vision, and life, and that as a member's ability to interface effectively with the application support mechanism and making informed decisions, well, it all becomes increasingly critical as the number of choices increases. So, considerations for these platforms. They include a cost of the underlying insurance, flexibility in designing offerings for employees, the amount of lead time necessary to transition across contracts, customer service models, etc. And very importantly, the usefulness of the decision support tools given the profile of your employees. Here are some references that are used here. Again, please reach out to us if you'd like some additional information. And as always, our key takeaways. You should evaluate the impact of the Affordable Care Act to your business proactively. This involves an assessment of payer play as well as compliance matters. Based on this analysis, you should evaluate whether you're going to continue to desire to provide health insurance for your employees during 2014, given the new rules. Some employers will probably decide for a variety of reasons to not continue, but most analysis suggests that, particularly in 2014, most are going to continue to offer insurance, in part due to the uncertainty around how these public exchanges are going to actually work. And finally, if you do continue to offer health insurance in 2014, you should consider including private exchange models as a strategy, keeping in mind that, hey, the devil is in the details. So as always, we take great pride in working within our team to stay at the forefront of the changes in our industry and make sure that the complicated and extensive information out there is turned into something specific and useful to our customers, as well as our brokers. So please let us know where we can help you. And thank you again very much for your time.